Well-known author, investment banker, consumer advocate, analyst, trader. Chris Markowski is the watchdog on Wall Street.
You want answers?
Exposing the lies and myths that the big brokerage firms, the mainstream press, and the government are pushing to keep Americans away from financial freedom.
You can't handle the truth.
Bringing America the truth about what really happens in the financial world.
Ladies and gentlemen, we're not here to indulge in fantasy, but in political and economic reality.
This is the Watchdog on Wall Street.
Yes, it is. Welcome, everybody. All right, it was a bit of a crazy week as far as the markets were concerned. Again, I remind everyone, and this especially goes out to my new listeners, if you think that my office is full of large computer screens and television sets tuned into CNBC and Bloomberg and all that stuff over the course of the day with charts up everywhere, you're crazy. It's not what I do. It's not what I do. Oftentimes 4 o'clock comes around, and I don't know what the market did for the day. It doesn't concern me, quite honestly. How could you say that? You manage people's money. You've got to. No, I don't. I don't care. I don't care what the markets are going to do over the short term. I'm not in that business. I'm not in the business of playing roulette with my clients' money. I watched a parade of idiots. I did watch some CNBC over the course of the day. You know, when I watch CNBC, I usually get my first workout in the morning. I did 7 o'clock. From 7 to 8 a.m., 7 to 8 a.m., I'm in my gym, and I have CNBC on over that period of time. And I watch, and sometimes they bring really great guests on, and guys like Ken Langone and other executives that I've got a great deal of respect for. But oftentimes you just get a parade of so-called experts telling you what they think is going to happen, oftentimes giving non-answers. If you pick up a newspaper, or if you pick up, or you go to any of the websites, the business websites over the course of this week, what did you get? Pictures of traders holding their head. Yep. They dip into the stock photography. They have a folder. All these websites, all of these so-called journalistic enterprises, they have their stock photography folder, and they've got the market up folder, and they have the market down folder. Markets go down, bit of a sell-off. Boy, oh boy, we've got to find pictures of traders that look stressed out and put them on our websites. It's a joke, people. Had a story come out, many stories come out, very similar, trying to explain what happened. Why? Oh my God, why did the markets do this? And some will try to point the finger. They take a look at the manufacturing numbers that came out. Manufacturing, what was that? Tuesday. And then you had ADP numbers, which were good, actually. They weren't gangbusters, but they were good. They came out Wednesday. And then you had the service sector data come out. And Thursday, oh, no, the service sector's slowing down, too. We're all going to die. We're going to hell in a handbasket. No, we're not. No, we're not. Economic growth is strong here in the United States. The job market continues to be tight. But there's this grand desire to be in search of the next downturn, to be in search of a recession. Written about this. We've talked about this here on the program. It makes for good print. They have to talk about something on these business programs. They've got to get people bent out of shape. What we try to teach here is bear them no mind. Bear them no. If you've done things properly, if you've got your financial plan done the right way, the hell do you care? What do you care, honestly? Why does it matter to you whether or not we are going into a recession? Does it matter? Does it really matter? Are you going to stop putting money away because you fear that the markets might correct? Let's say the markets correct 15 to 20%. I will change nothing. Nothing. You know when I change? You know when I make changes? I make changes when there's fundamentals change in the companies that we own, or when something becomes overvalued. Something becomes overvalued in a portfolio and you need to trim and you need to readjust. Or if there's a situation where, again, something goes wrong and you've got to limit your downside on something, which happens from time to time. But one of the interesting things is recessions are pretty good times to be invested. Pretty good time to be invested when markets come back, are they not? Where are you going to go? You're going to go to cash and you're going to guess when the market's going to turn around and come back? So you think you can do that? Do you think anybody out there can do that? Now, let me frame this in a different way. Do you think that that's what you think what guys like Charlie Munger and Warren Buffett, you think that that's what they're doing? You think that Warren Buffett sits in a room, Charlie Munger sits in a room, and they have quotrons and charts up everywhere and television screens going on all the business networks, and you think they say, okay, time to pull the plug. We think the market is going down, and we're going to wait until we think when the market is going to come back. Do you think that that's what they do? No. We've been trying to explain here on the program for a couple decades plus now what to do, what it means to be a successful investor, what traits one needs to have. Talked about our rules of the road that we put out some 13 years ago, compounding the royal road to riches. Don't lose money. Invest like a millionaire. Buy assets on sale. Pretty simple stuff. It is. Pretty simple stuff. But you need patience as an investor. That's an important trait to have, too. Understand that time is your most important asset. Time. You're going to make more money spending time invested than trying to time the market, if that makes sense. More time in the market than trying to time the market. And at times, guess what? You're going to have to show a little bit of courage. Things don't always go your way. 2008, 2009. Who did well? I mean, honestly. Who really did well over that period? We did. We were down. Coming out of it, man, oh man, did we do well. It's pretty hard. I get it. Everybody's telling you that there's a recession coming. The guys on TV, oh my God, what's going to happen? The chattering classes, the pundits, all of the wizards of smart. You need to take a few steps back. You need to consider everything. You cannot act out of fear. People who act out of fear make very, very poor choices. It's true. I've often talked about the fact that human beings are not hardwired to be good investors. They're not. I've been doing this a very, very long time. Buy low, sell high. Why is it that everyone does the exact opposite? Huh? One of the things it's hard to do. I don't know why. It's maybe because people have become accustomed to the charts and the computers and the screens and the dots and the blips. When I buy a company, when I purchase a company, I look at it the same way I would look at if I was going out to purchase a business, a local business, not trading public, whether it be a restaurant, whether it be a grocery store, whether it be a dry cleaning shop, whether it be a car wash. I look at the business the same way. Again, obviously it's much easier to sell and get out of stocks than it is a local privately owned business. I get that. It's one of the benefits. But for all intents and purposes, it's the same thing. A company, a stock, price of a stock, the overall value of a company, simple. You evaluate it based upon the money the company makes, what industry, and what the expectations are for the future. That's it. Really that simple, people. That's what you're doing. That's what you're putting into your portfolio. Now, if the company's in your portfolio, let's say this week, you take a look, you decide, I don't recommend doing this. It's not a smart thing to do. Let's say you take a look at your portfolio over the course of this week. Oh, my God, it's down 2%. Oh, no. Ask yourself a question. The companies in your portfolio, anything fundamentally change with them? Anything fundamentally change within those companies? Any new information come out? I mean, it can happen from time to time. Something can go wrong with the company, and gee whiz, then you've got to cut your losses in a situation like that. But the markets? You're going to let what the markets are doing dictate what's in your portfolio and what you're doing? Not to mention the fact, again, one of our rules of the road, compounding the royal road to riches. You've got high-quality companies. You've got high-quality companies within your portfolio that are paying dividends. What happens if you're reinvesting those dividends when markets come down? You're able to purchase more shares of the companies that you already own in high-quality companies. I mentioned this a couple of weeks ago on the program, and I did get a few emails. People didn't really understand what I was getting at. Stocks have outperformed every other asset class over the past 200-plus years. Period, the end. There's no debating that. But what has made up the bulk of stock market returns has been the dividends and the reinvestment of dividends. We have made them the foundation of our portfolios. Always. Always flying in the face of every single fad that's been thrown out throughout our entire careers, whether it be dot-coms, whether it be real estate, whether it be emerging markets. No. The foundation of our portfolios are high-quality companies that pay you to own them. It works. It always has. We got to take a quick break. But I got to remind everybody. Listen, if this sounds foreign to you, what I'm talking about, if you're not doing this, you might want to get to our website. You might want to go back and read countless articles that we've written over the past several decades. You might want to get in contact with us. You might want to speak to one of the Markowskis, certified financial planners, maybe sign up for our account repair kit, all sorts of great stuff that we have at the website. Just get to watchdogonwallstreet.com. That's watchdogonwallstreet.com. We also have a 24-hour-a-day help hotline, 800-471-5984. That's 800-471-5984. Now, I'm telling you right now, you know who you're going to speak to? A Markowski. You're going to speak to either my brother Matthew, my nephew Josh, my brother Michael, or myself. Yeah, we're on 250 stations around the country. We get countless calls. But you know what? We handle it. We take care of business. WatchDogOnWallStreet.com. WatchdogOnWallStreet.com. We'll be back.
You should believe in math, not magic. You're listening to The Watchdog on Wall Street with Chris Markowski.
I get the same old dreams, same time every night.
Welcome back, everybody. It is the one, the only, the Watchdog on Wall Street show.
So I get out of bed, put on my...
You know, I talk about dividends. I talk about yield and safe yields here. And obviously, they're hard to find. Hard to find. We have right now up on our website our Where's the Yield kit. There isn't many places to get safe yields. Take a look at where bonds are. But it hasn't been this way for a very, very long period of time. We've been working with people, been putting together various different programs to help build income in people's portfolios. What the desire is. Okay? Look at your portfolio as a store, right? It makes sense. Try to visualize this. A store. I used to work for, when I first moved to New York City, one of the people that I worked for, they owned, actually, it's still there, one of the higher-end grocery stores in Manhattan. And I didn't work in the grocery store, but I worked in the restaurant that they had there as well. And they were also tops of produce in the city. And their grocery store had all the sorts of amazing stuff, great Italian things you couldn't find anywhere else. But every single inch of that store was stocked with product. You couldn't find a spot where they weren't selling something. There wasn't something there being sold. Now, you want to fill up your store, your portfolio. You want to fill up your portfolio, not over-diversify. I'm not talking about over-diversification, but with high-quality companies, securities that pay you. The ultimate goal. And again, can I be honest with everybody here? This doesn't work out for everybody. It doesn't, because sometimes people start too late. Sometimes people don't save enough. Sometimes people make poor decisions with who manages their money, and they end up losing a fortune, and they've got to start over again. But the goal is, what you're trying to do, is you're trying to get to a point in time where your portfolio, you live off of when you retire. When I mean you live off of, you don't have to sell anything. You don't have to look to your portfolio and say, hey, what stock, what things do I have to sell at the end of the month? What do I have to sell at the end of the month there to pay my bills? That's the last thing in the world you want to do. We don't allow that. We've talked about having a certain portion of your portfolio in cash because, again, you never know what the markets might do over the short term, and you need to be protected from that. But there's a lot of places that you can go, things that we have done. Sound dividend-paying stocks. Preferred stocks. Some of the preferred stocks. Some of the preferreds that we've been dealing with just over the past year. Here, I don't know, mentioning some of the names. Yield, 5%, 6%, 5%, 5%, 7%, 6%. And these things have gone up over the course of the year. Not to mention some of the common stocks that have done really, really well. Now, certain sectors out there that are paying dividends have gotten a little bit expensive. Utilities, real estate, materials. So what do? We may trim those positions a little bit. Other areas that have not done so well that are paying dividends: energy, healthcare, financials, some tech, some communication services. You can rotate those assets. Take some money off the table, not blow out of an entire position, but tend your garden, so to speak. Move some things around. Rebalance. This is what successful investors do. All the while, guess what? You're collecting those dividends. And either you're living off them at some point in time, or guess what? You're reinvesting them, building up greater wealth. WatchdogOnWallStreet.com, WatchdogOnWallStreet.com. Get the help you need. We're here for newsletter consultations with our certified financial planners. WatchdogOnWallStreet.com. Give us a call. 800-471-5984.
You're listening to the Watchdog on Wall Street. Bringing America financial freedom one listener at a time. You're listening to the Watchdog on Wall Street with Chris Markowski.
All right, I'm going to go off on a bit of a rant here, and bear with me. Bear with me, everyone. And some of my new listeners, you might get a little bit offended. You might get upset. What I'm going to ask you to do is I'm going to ask you to I have to say, from Friday Night Lights, clear eyes, open hearts, can't lose. You got to go into this program with that type of an attitude. There's a lot of tough love here on this show. I do not pander to my audience. I don't. I'm very, very direct, and I'm very honest with everybody. I am. And oftentimes, guess what? I may tick people off. But if you actually think about what I'm saying, think really, really hard. I don't care how offended you might be right off the bat. You'll see that I'm right. I'm a little sick and tired of the Great Recession, 2008, 2009. It's used as, I don't know, as almost like a landmark. As a landmark in many, many ways, the business press. Oh, we haven't seen numbers like this since the Great Recession. And they always love to talk about, investors. Investors lost all this money during the Great Recession. Wall Street stole from all of these investors during the Great Recession. I'm tired of hearing this. I am. I don't know why. Because it's nonsense. Did you lose money? Who out there right now, I'm asking you, who out there lost money during the Great Recession? Lost money. Like it went to money heaven, never to be seen of again. Who lost money during the Great Recession? Oh, you're upset because they point to that too. Oh, home values and what happened there. Did you actually have the cash on hand? Or was that just the valuation that your house had, the fake valuation that your home had at that period of time? Who lost money? Did you sell all the stocks in your portfolio because the markets went down? Whose fault is that? Whose fault was that? We didn't sell. I didn't sell. My clients didn't sell. So the 2008-2009, in my perspective, was one of the greatest buying opportunities ever. Our clients made a fortune. A fortune. Yet it's pointed to because the markets went down for that period of time and people did silly things. We took advantage. Does that make us a vulture investor? No. No, it just makes us smart. I often point, I use the phrase, and again, I didn't come up with it. It was Donald Luskin back in the 1990s. A conspiracy to keep people poor and stupid. People doing dumb things with their money. And then the worst of it is that they blame somebody else. Yeah. Are the big investment firms out there, are they self-centered? Are they crooks? Do they do crooked stuff? Do they get away with it? Yeah. Yeah, we've been reporting on that now for a very long period of time. But they didn't point a gun to your head and tell you to blow out of your entire portfolio at huge losses. That was you who made that call. Or the bad advisor that you picked. Now, this is where it kind of gets rough. You got to put your big boy pants on, okay? I know this is hard for people to do. Don't blame anybody else for your mistakes, your errors, your situation. Take a good hard look in the mirror and blame yourself. Stop. So we got a nation out there of victims. Somebody is always taking advantage. I'm a victim. This one victim. Listen, if you've figured out what the big firms are, then you haven't been paying attention and what they do. And guess what? They will probably cause another financial calamity in the future. Just don't participate. Don't participate in the financial calamity. And again, we just talked about this. That involves a little bit of courage. Stop looking to place blame. There's two lines I thought of this past week. It was Sean Connery in Rising Sun. He was telling Wesley Snipes. He was lecturing him and saying that the Japanese don't look to fix blame. They look to solve the problem. Don't look to fix blame. Solve the problem. And I also thought of Jack Ryan in Clear and Present Danger. Things going down in the jungle. It's a mess. It really wasn't his fault what happened, but he owned it. He took responsibility because he didn't see the crooks for who they really were. We're here to help you. We're a tool, okay? You're listening to the program right now. You don't have any excuse. Watchdog on WallStreet.com. Watchdog on WallStreet.com. We'll be back.
Taking Wall Street's liars, crooks, and cheats out behind the woodshed. You're listening to the Watchdog on Wall Street.
We're back. I was gonna grab a couple of voicemail messages that I received this past week. I was gonna send them over to John and have him clean them up, but most of the voicemail after he cleaned them up would be beep, Markowski, you're a beep, 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 beep. Oh, it's funny stuff. Guys, I didn't make the Peloton IPO tank. Okay? I didn't, because I talked about it on air. And I explained to you that, here's a company that sells a stationary bike, and they super glued an iPad to it, and they sell it for a couple $1,000, and then you got to pay them, $50 a month to ride the bike. Woo! Sorry, I didn't think that was a great investment idea. And obviously, I'm not the only one. I mean, listen, if Peloton went public a few years ago, the stock would have went up probably right away, because it was, people were more akin to throwing their money away. I guess for whatever reason it may be, people are starting to wake up and they don't want to throw their money away on companies that don't make a dime. That don't make a dime. That aren't even close to making a dime. There's a great comparison that I heard this past week. I see various different Wall Street morons going on CNBC and programs talking about and comparing some of these companies that we've warned you about, Uber, Lyft, and others, comparing them to Amazon. You know how many times Amazon raised money? Once. When it went public. Back in the 1990s. That's the one time it raised money. And these SOBs, so-called gurus, analysts out there, people who are managing other people's money, have the nerve the gall to compare it to Amazon. The hell you think you're kidding? Uber's been around for over 10 years, and it's done nothing but raise money because it's a cab company is what it is. It is a cab. I don't care how many new damn initiatives that they have. They're nowhere close to making any money. Now, let's talk about all of our illustrious investment banks. I know I touched on this last week as well. J.P. Morgan, Morgan Stanley, Goldman Sachs. Do you think, I'm going to ask this question, we're going to go to break, okay? Do you think that all the Ivy League, MBAs, Harvard Business School types, because that's who's working at those companies, do you think that they are oblivious to the fact that these companies can't make any money? Or do they not care? I'm going to leave you with that question. We'll come back and we'll answer it. WatchDogOnWallStreet.com. Watchdog on WallStreet.com. I shall record.
This is the Watchdog on Wall Street.
What was some of the other comments I made? You know what you're doing to the commercial real estate market, Markowski? You're talking down WeWork. What's going to happen if they collapse? I don't care. I don't care. If commercial real estate comes crashing down because WeWork falls apart, good. It was overvalued in the first place. It's called price discovery. I have no problem with it. It's the same thing. We'll talk about a little bit later on in the program. We're talking about the Manhattan real estate market and how it's coming down. Why is that bad? It isn't. Yeah, WeWork falling apart, disaster. Stories coming out this past week talking about Uber. Uber is getting cheaper coffee at their coffee bars now. They have to cut costs. You don't say. You don't say. Each and every single, this is the reality, people. Each and every one of these companies was no different than any of the companies that any of the penny stock brokers back from the 1980s and 1990s were taking public. The only difference is size. That's it. The only difference. These Wall Street firms, Silicon Valley, various different venture capital firms, they laddered these companies up. What does that mean? They increased the valuation little by little, keeping these companies afloat, all with the grand desire to take the company public so they can blow out of their position. Anybody taking a look at the business model of these companies could have figured out that they were not going to be profitable. You didn't need to go to Harvard's business school to figure that crap out. And yeah, all these big firms, they're investment bankers, the whole lot of them, they're all Ivy League MBAs. And I'm sure that their schools now make them take an ethics class. But you know what? It's probably pass-fail, and they're probably not paying attention at it because each and every one of them had an ethical bypass at birth. Period. The end. How do you live with yourself? I'd say it right to their faces. And I'd say it, you know what? I'd go right up to the brokers at Morgan Stanley. I've done it. Merrill Lynch, the lot of them. How do you work at these firms? You're not stupid people. You know what goes on. You know that they crafted these companies and you know that they're garbage. And you sell them to your clients without a care in the world. What's wrong with you? How could you do that? How do you live with yourself? Goldman Sachs, J.P. Morgan, Morgan Stanley, with all their fancy advertisements and sponsorships of the U.S. Open and golf tournaments. They're nothing but a bunch of crooks. God, they had their fingers crossed. They were so close to getting that WeWork IPO out, so close, where they could make millions upon millions of dollars in fees and make themselves a fortune on the backs of you. You. You're the mark. Do you understand? You are the greater fool. They're counting on you. These big firms, they count on you. They're counting on the American public's, I'm going to say it, stupidity when it comes to investing. And you know what? They're always right. Why wouldn't they bet on that? People do dumb things again and again and again with their money. How many of these companies over the past few years have I warned you about, told you exactly what was going to happen? Now, I had a grand desire that maybe it'll happen someday. I highly doubt it. That these big banks at some point in time, the Republican Party talked about it. It was part of their 2016 platform, breaking up these big banks. But again, I'm a libertarian as well. I am. Okay, at some point in time, like my last rant that I went off on, you're going to have to accept ownership. You're going to have to own it. You're going to have to say, you know what? I'm not going to work with these companies anymore. I'm going to move my business. I'm going to take my business elsewhere. I don't understand for the life of me. I don't. This is all out right there in front of us. One scam after another scam after another scam. These guys, not too long ago, 10 years ago, were crafting securities that they knew were going to fail and selling them to your pension fund, to municipalities, to school districts, without a care in the world. They got to pay for their Hamptons house. They do. They got to pay for their Hamptons house. They got to pay for their helicopter ride out to the Hamptons. They got to pay for their clubs. Yeah, it's legal theft. White collar. I've said it here on the program. White collar crime pays. Don't tell me otherwise. White collar crime pays here in the United States. Whether you're in politics, whether you're in the media, whether you're in big business on Wall Street. And no, I'm not Elizabeth Warren. I'm a capitalist. I just hate crooks. And that's all we have right now. Stop being a dupe, people, please. And no. Me talking about Peloton here and what a piece of garbage company it is as far as its IPO is concerned on the show didn't make the stock go down. WatchDogOnWallStreet.com. WatchDogOnWallStreet.com. Our newsletter, consultations with our certified financial planners. We'll be back.
Wake up, mama. Turn your lamp down low.
Chris Markowski is the watchdog on Wall Street. Well-known author, investment banker, consumer advocate, analyst, trader. Chris Markowski is the watchdog on Wall Street.
You want answers?
Exposing the lies and myths that the big brokerage firms, the mainstream press, and the government are pushing to keep Americans away from financial freedom.
You can't handle the truth.
Bringing America the truth about what really happens in the financial world.
Ladies and gentlemen, we're not here to indulge in fantasy, but in political and economic reality.
This is the Watchdog on Wall Street.
I need to have sent over to me. I don't watch. I don't watch Saturday Night Live anymore. They just got way too, one-sided and off the deep end. I'm all for comedy and making fun of politicians. I have no problem making fun of Donald Trump, but you like to try to make fun of both sides. But anyways, somebody sent me over a clip from last week. It was the first show. Woody Harrelson was the guest host, and they did a fake Democratic town hall debate, and it was funny. I couldn't believe it. But I did notice they didn't really make too much fun of Elizabeth Warren. They didn't. But anyway, why do I bring this up? Why am I talking about this? Listen, I'm honest with everybody here on the program. I'm not a member of any political party. I used to be a member of the Republican Party. I'm a true, dyed-in-the-wool, old-school Adam Smith capitalist. Not this new variation that we have here in the United States today with the, I like to call my watchdog on Wall Street, axis of evil, where big business and politicians and the media work hand in hand to further their own needs. I'm talking about a true free market where we're equal under the law. And my longtime listeners know here on the program, I'm consistent. I'm against any sort of handout or giveaways to corporations, any sort of subsidies at all. None. Not for anybody. I'm against tax deals for businesses, moving things to a certain area. Why does a mom and pop have to pay the taxes and the big business that moves to town? Why do they exempt? It's not right. It's not fair. It's not what this country is all about. But we've gotten to a whole other level right now of absurdity with some of the ideas that have been coming down the pike. Now, Barack Obama, and I've talked about this before here on the program. I'm not the only one that noticed this. Other people as well. There was actually a piece in National Review this week by Kevin Williamson where he pointed out Barack Obama mentioning that raising taxes was a moral imperative rather than about raising revenue for the Treasury. And that all went back to a debate with Hillary Clinton where they were talking about capital gains taxes and how when Bill Clinton lowered capital gains taxes, revenue to the Treasury went up. And Barack Obama countered with that with, raise them still because of fairness. What? What are you talking about? That's not what the tax code is supposed to be about. It's not what it's there for. Remember Obama, our tax code must reflect our values. What does that mean? What does it mean? The ideas that are being put forward right now are frightening, to say the least. The latest idea that we saw this past week was from Bernie Sanders. And Bernie Sanders thinks it's going to be a wonderful idea to tax corporations if their CEOs and their executives make too much money in relation to the people at the bottom. There's a formula that they've come up with in regards to the CEOs making more than the median worker at the company. And if that number is too high, the disparity is too high, they're going to tax the corporation. What? Tax corporation. That's going to hurt shareholders, is it not? It's going to hurt shareholders. Is it going to affect the pay of the CEO? No. No, it doesn't change the pay of the CEO. But they'll send people on TV, and we're trying to do away with this, and it's not right that CEOs are making this, and the guys at the bottom are making this. Well, wait a second. So you're putting together this tax, right? You're taxing the shareholders, taxing the corporation. That money that you're getting, is it going to increase the salary of the people working at the bottom at the corporation? No. I'm going to use janitors for example. And I'm going to use janitors, for example, because I used to be one. I used to be a janitor. Many years ago, I had no problem with the job. My dad was a school teacher, owned a janitorial business. The job I had since I was very young. I had my own office buildings when I was in high school. Yeah, no problem with it. I was a janitor. So, janitors, listen, they're good ones and they're bad ones. I happen to be a pretty damn good janitor because my father would come and check on our work, and if there was a spot on the sink or a piece of paper on the floor, he would deduct money from our pay. I'm not kidding. And again, you get good at getting your job done quickly and efficiently and done well, and it's like anything else. It's a skill, but it's not a high-level skill. It's not. There's a cap on how much janitors are going to make, right? So if Bernie decides that he gets this tax through, he wins and he gets it through, is the salary of the janitors, the people at the bottom, are they going to go up? No. So what the hell is the point? Got all these people, these policy makers out there. One policy after another policy after another policy. And again, they're like children. The ideas that they come up with on their face sound good in the sense that we want everybody to make a lot of money and it's not fair and we're looking for equality, and if we do this, it's going to be wonderful. And it's nonsense is what it is. It's like they have the Hallmark Channel crafting their policies, but they don't think them through. There's a line. It's not politically correct in today's day and age. Don Corleone in The Godfather made the statement. He said, women and children can be careless, but men cannot be careless. No, nobody should be careless. Policymakers cannot be careless. I cannot be careless. I'm a father. I've got a business. I have to think things through. When I make a decision, I have to understand the myriad of different consequences that might occur. And they just throw things out there. A classic example of this would be Obamacare. I was pulling my hair out. They're pushing this idea. It sounds good. Nancy Pelosi couldn't wait to do her little march up to the Capitol with the gavel in her hand. They passed something that was an abject disaster. It didn't make any sense. The numbers didn't add up, but it sounded good. And Barack was going around telling everybody that their health insurance was going to go down by $2,500. And everybody was going to be covered, and it was going to be awesome. No, it's a disaster. We, the people here, it's our own damn fault. We listen to these people. We listen to them. We believe what they're saying. You need to think. What is going to happen? What do you think is going to happen? Yeah, Elizabeth Warren and her wealth tax. Do you really think that that's feasible? How do you think that's going to affect pension funds? We talked about this here in the program. When are they going to account for this? When is going to be the financial reckoning day, the wealth reckoning day, when the stock market will crash because everybody's got to start selling their shares? Or are they going to just change things up and just seize assets? I don't know. We don't think things through. We act irresponsibly. We act in a careless fashion. My question has always been, how much is enough? Now, again, I'm an equal opportunity basher here on the program. Hey, Trump got his tax reform passed, and there's a lot I like in the tax reform that he passed. And there's a lot I didn't like. A lot I didn't like either. I think probably the best part of tax reform, which actually doesn't affect me at all, is the fact that he lowered corporate tax rates here in the United States. Evil corporations, they should be paying their fair share. No, you don't understand. Corporations never pay taxes. Their customers pay those taxes. And the products that they buy, the cost is embedded into the products. It's embedded into the services. A corporation is nothing more than a tax ID number and a logo. And corporations are going to be smart, like they were during the Obama administration, and they're going to move, which they did. You cannot have the highest corporate tax rate in the world. In my opinion, corporate tax rates should be 0. But again, it's too difficult for human beings to get their minds wrapped around in today's day and age. But there was a lot in the tax reform I didn't like. I didn't like the fact of picking and choosing certain businesses for certain deductions. And I also didn't like the fact that we didn't talk about spending. We didn't talk about spending. We always throw the idea out there, tax cuts, they're going to pay for themselves. You know what? You get no argument from me that tax revenues are going to increase. But why not? Why not? Why didn't conservatives come out and say, you know what? Well, we'll play devil's advocate. We'll say, you know what? You're right. Revenues are not going to increase. So in order to pass this tax reform, we're going to have to cut spending. No, they don't do that. They don't do that. Again, can never stop spending. You know, numbers came out this week, topic of taxes. Americans spent more on taxes in 2018 than on food, clothing, and health care combined. Think about that for a second. We, the people of the United States of America, spent more on taxes in 2018 than on food, clothing, and health care combined. Boy, oh boy, those taxes on tea and the Stamp Act sound a hell of a lot better than what we're dealing with today. Yeah. For me, it's not even close. I could throw vacations in. I could throw my housing, everything. And it just keeps getting worse instead of better. Yeah, they can spend. That's for sure. And the funny thing is, we allow them to do it. WatchdogOnWallStreet.com. WatchdogOnWallStreet.com. A lot more we've got to go over on the program. Don't go anywhere. WatchdogOnWallStreet.com. Our 24-hour day help hotline, 800-471-5984. That's 800-471-5984. Be back.
The only man who is taking on the Wall Street establishment. You're listening to the Watchdog on Wall Street with Chris Markowski.
I mentioned a phrase a little bit earlier on in the program, the conspiracy to keep people poor and stupid. And I also mentioned another phrase that I guess most people can equate it nowadays, called the deep state, the swamp. Before there was a deep state, before there was the swamp, we were talking about the Watchdog on Wall Street axis of evil. Big business, politicians, and the media working hand in hand to further their own needs. We've lamented against this. We've talked about this for a very long period of time. Now, again, they need to work together. There's the people out there that like saying, corporations own Washington, and this one owns this one, and that one. They're all buddies, man. They're all members of the same club. That's what people fail to understand. Without the press, without the media, they couldn't get away with the crap that they've gotten away with. No way. The stories that we report on here on the program, what happens on Wall Street and the stuff that they do, they don't report on that. Occasionally they'll cover a story here and there, but it's not made out to be a big deal. They have their own story, their own narrative. What this program has been about is defying that. Another way you might want to put it, the concept of conventional wisdom. Conventional wisdom is wrong. It's poison. They don't have your best interests at heart. I mean, think about it for a second. And I'm not just talking about the stuff that the business networks have been throwing at you, or they've been throwing at you when it comes to politics, or how great their various different policies are, whatever it may be. I mean, you can think about it from the crap that they've been throwing at us in regards to the food that we eat. The food pyramid. It's just one lie after another lie after another lie. Or wars that they've sold us on. And conflicts that we've got to get involved with. Again, the narratives that have been being pushed as of late, well, they tried it and it sputtered out, was this recession thing, right? We're going to recession, economy's slowing down, and it's terrible out there. And they have the various different measurement sticks that they like to point to. And we've pointed some stuff out here on the program that we've made fun of for a while here. The fact that when unemployment is really, really low and people are making all sorts of money, somehow to the powers that be, that's bad news. How many people out there ever, when you listen to the television, oftentimes what happens is, oh, he's on TV. He's on TV. That means he must be smart and knows what he's talking about. No. How many people listen to somebody on TV tell them that, the economy's going to overheat? Where you see them using mechanical metaphors to describe the economy, like it's an engine. Oh, it's revving too high. Unemployment's too low. The economy is going to overheat. We have to put the brakes on the economy. Why? Why would you do that? It doesn't make any sense to me. Make sense to you? No, it doesn't. Why? It's bad that people are making more money? It's bad that workers are bringing home higher paychecks? We got to put the brakes on that? Why would we do that? There's many reasons and theories that I have. Again, government likes having its power and likes welfare and handing stuff out to people because it gives them justification for their existence. But the reality is, we right now, by the measurement sticks that I like to look at, wage growth, things most important to me in the entire world, as far as the economy is concerned, is wage growth and unemployment. We're killing it. I mean, you remember the scene from Caddyshack where Judge Smales goes up to Chevy Chase. It was Ted Knight playing Judge Smales. Goes up to and asks him what he shot for the day. And Chevy Chase goes to him, well, I don't keep score. And he goes, well, how do you measure yourself against other golfers? His answer, by height. I measure the economy not by what the GDP is doing at a certain point in time. And again, if you actually take a look how they calculate these things, it's not always right. It's how well is the country doing? Are people making more money? Are there job openings everywhere? Am I seeing help wanted signs? About what's truly important. In the same way that I take a look at inflation. Items that people buy, are they going up? Are they going down? WatchDogOnWallStreet.com. WatchDogOnWallStreet.com, our newsletter. Consultations with our certified financial planners. All sorts of great stuff at the site. Take advantage. WatchDogOnWallStreet.com or give us a call. 800-471-5984.
You're listening to the Watchdog on Wall Street. You should believe in math, not magic. You're listening to the Watchdog on Wall Street with Chris Markowski.
Welcome back, everybody. It is the Watchdog on Wall Street. Always honored to have you tuned in to the program. again, I know I'll get some nasty emails over this next segment because, well, some people are probably caught on the wrong side of the real estate trade in New York City, in Manhattan. Let me explain it to you this way. I don't care if it's stock, I don't care if it's bond, I don't care if it's real estate. Any asset class out there has a certain value to it. Has certain value to it. Sometimes it trades below the value. Sometimes it trades above the value. I like to purchase things below value and sell them above. Buy low, sell high. Well, one of the stories that was pushed on various different publications and networks this past week was Manhattan real estate. Manhattan real estate has fallen off a cliff. And again, they had to use that financial crisis benchmark. Manhattan real estate prices take the biggest tumble since the financial crisis. Now, my listeners know that we told you this was going to happen. Nope. I don't have a doctorate in economics or anything like that, but I can go into the city and I can see tons and tons and tons of residential real estate going up everywhere. I can see old warehouses and office buildings being turned into apartments and co-ops and condos and all sorts of stuff. And I'm saying, gee whiz. And I take a look at the prices of them. Ooh, 1.1 million, 1.7 million. And I say to myself, how many millionaires are there? How many millionaires are there? And are all the millionaires going to all of a sudden buy lots of apartments in New York City when many of them live here already? And this is the same crap that I talked about here on the program, but this is back in 2005, 2006. There was a, right where I lived in Southwest Florida, they opened up a new complex. It was called, I'm not going to mention the name, hurt anybody's feelings. But anyway, the lots. This is about a half an hour away from the Gulf of Mexico, okay? Half an hour, probably now 45 minutes with the traffic down there in Southwest Florida. $250,000 a lot. Lot size, maybe an acre, if that. And they were selling, they put up a bunch of model homes. Homes, $3 million, $5 million, $7 million. This whole community, and they're designing it with grapevines and stone this and stone that. I'm laughing my head off. People rushing out to buy $250,000 lots, thinking they're going to put these homes up there. I say, and I'm warning everybody, you're all going to lose. You're all going to lose. You're all going to lose a fortune. Don't do it. Don't do it. Oh, no, God's not making any more real estate, blah, blah, blah. And I said, wait a second. Can't you people think for a second? How many multi-million-dollar homes do they need in a cow pasture? How many millionaires do you think they're going to afford these homes in Florida? Think about it. Count. You can come up with the numbers yourself. It's another investment scam, a Ponzi scheme. The people there, they're going to get people to spend $250,000 on an acre in a cow pasture. They're going to sell it. It's who's dumb enough to buy it. Supply and demand works everywhere, people. Do you understand? Again, you just need to think things through a little bit. You need to tune the salesman off. Okay, don't listen to salespeople. Use your brain. Manhattan real estate. Oh, it's never going to go down. What are you talking about? It's never going to go down. Sure it will. Not everybody can afford those apartments. There's tons of them going up. You can build up in Manhattan. You can do skyscraper, do all sorts of stuff. And most of them are empty right now. And I don't care. Let the damn thing crash. Let it come much further down. And when it does, maybe I'll buy an investment property. Who knows? Not now. Still way too high. It is still way too high. Now, there are other areas outside the city. Westchester, Long Island, a little bit different there. There's not building any skyscrapers. Certain zoning rules. They don't let you build. Take a look at those real estate values. They keep going up. Again, people, you get these idiots on TV trying to explain to you real estate, and they try to encompass the entire country, or they try to use pockets of the country to try to say, oh, my God, we're going to hell in a handbasket. It doesn't work that way. You understand? It doesn't work that way. Again, conspiracy to keep people poor and stupid. WatchDogOnWallStreet.com. WatchDogOnWallStreet.com.
Bringing America financial freedom one listener at a time. You're listening to the Watchdog on Wall Street with Chris Markowski.
I'm letting it play for a little bit. I'm letting it play. Anybody know the song? Come on. This is 1980s Genesis. Phil Collins, the lead singer at this time. This is after Peter Gabriel. Wait for it. There it is. There it is. The title of the song, Illegal Alien. Now, I just got a question. I don't know. Maybe I should call up the. Yeah, I should probably do that. I should call up the New York City, the Department of Idiots or whatever the hell department's in charge of this, and ask them. Excuse me, I have a radio show. I've got a question about your new law. I've got a radio show, and if I play the song Illegal Alien, I just said the word. I just said illegal. Oh, can't even. If I say the A word on air, or if I play the song, the IA song on air, do I go to jail, or does Genesis and Phil Collins go to jail? Just curious. Here's the story. This is the world we live in today. It's now against the law in New York City to threaten someone with a call to immigration authorities or refer to them as an illegal alien. What? But they are an illegal alien. The word illegal is in the dictionary. Illegal, it's in our laws. There are laws on the books that use illegal alien. These restrictions put into effect, punishable by fines of up to $250,000 per offense. Part of the City Hall's Commission on Human Rights. Do you believe that New York City has a commission on human rights? Anyway, I'm not making this up. Not making it up. Anyway, moving on. I want to touch on this story. Actually, we had a couple trade stories I wanted to talk about. First and foremost, the United States won. And I want everybody to think about just how stupid the WTO is. They always say, "Oh, the WTO, you're going to take things up with the WTO." You know, the United States. You ever see these morons out there? And a lot of anti-tariff conservatives that hate tariffs. Oh, there's venues where we can take up this with the Chinese at the WTO. Why? We just won a case. At the WTO against Europe, against the EU, in regards to the subsidies that they give Airbus. This case was started 15 years ago. 15 years ago. What could they possibly be doing and going over and litigating for 15 years? What? So you honestly think that we're going to work out our issues with China at the WTO? That's funny. That's fun. All you anti-tariff people out there. Oh, yeah, we'll negotiate with them at the WTO. Right. Sure. Anyway, a little bit more on this when we get back. WatchDogOnWallStreet.com. WatchDogOnWallStreet.com. We shall return.
Chris Markowski is the watchdog on Wall Street. Taking Wall Street's liars, crooks, and cheats out behind the woodshed. You're listening to the Watchdog on Wall Street.
She walked up to me and she asked me to dance.
Welcome back. It is the Watchdog on Wall Street show. Yeah, the WTO. Oh, we're going to be a member of the WTO, where nothing gets done and nothing gets solved. I see. What? You ever ask yourself, people just read these things nowadays? It's kind of like billions and trillions. Nobody actually thinks about it, the concept of it anymore. Kind of goes one ear and out the other. I don't. It drives me psycho. When I say 15-year case, I'm like, what were they doing for the past 15 years? What? What type of investigating? Could they be litigating for 15 years? Well, we won. Yay. Yay. And the United States, we can put tariffs on European goods to the tune of, I don't know how many billions of dollars it is. It's a lot. And Donald Trump right away ordered the tariffs to go on October 18th. Now you had various different companies in the United States and Delta, and oh, no, this is going to be bad because it's going to make airplanes more expensive and other items more expensive. I guess tariffs are going to go on scotch and wine and cheese and all sorts of stuff. But wait a second. Wait. We do have a trade meeting with the Europeans on October 14th. Okay. Room to negotiate. Maybe we'll actually get something done. Who knows? But no, I'm not against tariffs. I'm not. To this point, we still get the people out there talking about, well, the economy is weakening around the globe because of these tariffs and it's hurting manufacturing. And so what? So what? Sometimes you have to take a couple steps backwards to take many steps forwards. I am concerned about my kids and, God willing, my future grandkids and this country. And we can no longer continue to go on the way things have been going on. You see all the technology? It was at China had their 70th anniversary celebration they had there. All their high-tech weaponry that they were showing off there. Let me ask you a question. You think that they came up with that stuff by themselves? Huh? No. You think that how do you think China's economy has been built so quickly? It's by theft, by stealing our ideas. That's it. I mean, for crying out loud, they even copied the manuals down to the exact word with the same exact typos in them. Now, we cannot continue to go on making stuff, inventing stuff, and creating stuff, and just having cheap knockoffs being made in China. Sorry. You have to draw a line in the sand sometime. And if it's gonna hurt GDP growth for the United States for a period of time, so what? It's hurting them a hell of a lot more. It's not where we are right now. It's where we're going to be down the road. Anyway, I want to touch on this as well. This is a shame. It is. The USMCA. The USMCA is a trade deal. It's the NAFTA Part 2. You're talking close to 200,000 jobs and an additional $68 billion in economic growth for this country. It's a no-brainer. But, again, all we're doing right now in Congress is nothing. It's nothing. I don't know. Again, let me put this out there again. I'm trying to be as diplomatic as I can with this right now. I had serious policy issues and problems with the former president of the United States, Barack Obama. Because of that, I didn't want to have him impeached. I wanted to have him lose in the next election. and his policies being thwarted in the next election. I mean, you remember what happened in 2010. He got crushed after Obamacare. Got crushed. The Democrats did. But anyway, the Republicans have followed up, didn't do much. My point is this. Can you name for me anything that the current crop of characters in Congress has done? All you got to do, it's right there. Sign the USMCA. Get it passed. Also, all we're going to do is we're going to have, you know what we got right now? You know what the Congress does? It carpet bombs subpoenas. That's what they do. Let's just subpoena everyone. Let's just go after everyone. Let's try to destroy everyone. Hey, now listen. There were some people back when Obama first got elected that got into that whole birther thing, and I thought that was stupid too. Just as much as I thought the impeachment of Bill Clinton was stupid. But we've got some things here that could really help the American workers. And the people in Congress right now want to do nothing about it. They want to hold more of these stupid committee nonsense investigation crap. Anyway, quickly on this next story, I kind of found this funny. Democratic donors on Wall Street and in big business are preparing to sit out the presidential campaign fundraising cycle or back Donald Trump if Elizabeth Warren wins the party's nomination. Yeah. Now, what I found funny about this, can't give you one example, funny. You know, reporting on this on CNBC? I knew this. Jim Cramer. Jim Cramer reported on that last week. This past week, he came out and said, well, wait a second, I want to put a stop and let everybody know not to be scared of Elizabeth Warren. It's almost as if somebody at NBC got a hold of him and said, dude, you got to get your mind right. You got to go out there and you got to walk this back. We can't have this. Yeah. And you know what is funny is Cramer. And again, come on, man. Come on. I know you got to make a nice living there. You got your own show. But can you think for yourself? Can you grow a spine, please? His excuse, saying, don't be afraid of Elizabeth Warren. You know, I don't know why. Well, Congress will stop her. So wait a second, let me get this right. You want to put somebody into the highest office in the land. You don't agree with any of her policies. You know her policies are destructive, all in the hope that Congress is going to stop her? Whatever, man. Watchdog on WallStreet.com. Watchdog on WallStreet.com. I shall return.
You're listening to the Watchdog on Wall Street.